We also got Todd Horwitz on the CME. You know, the first down year for the Dow since 2008 doesn't feel so good. Right, Todd?
Hi, EMAC, and Merry Christmas to you. I think that we don't look so good, and I think it's going to get a lot worse before we get better. I think that there's going to be some sort of a washout, and I would look for it to be next year. Even though it hasn't happened since 1939, there's always a first time for everything, and I think next year is going to be a very challenging year for the markets.
Here's the thing, Mark Chaikin. You know, people are feeling kind of sketchy about this market right now. A lot of people went to the sidelines. Do you think that we already rang the bell at the top and we're going to have a flat year going in, you know, through 2016? What do you think?
I think we're going to rally into year end. I see 300 to 400 Dow points between now and the end of the year. So I think we close the year up 1% to 2%. And I think there's a good chance that we'll see volatility pick up in the first quarter, but that we will see a strong first quarter based on the fact that the consumer is pretty robust here. And I think first quarter earnings are going to drive the market
Mark,
higher.
let me stay with you on that for a second. You're right. I mean, volatility is still below historic averages. It's feeling choppy right now, and this is really the first time in a long time, and I'd say 6 years, since the markets have been off the Fed's dialysis machine. We're back to basically what the markets are built on. It's corporate profits. So, you know, what do you think is going to drive the market, though, up to basically 100-point increase before the end of the year? I'm going to get to Todd in a second, but I want to hear from you, Mark.
Just one word, the consumer. I think the consumer is very well positioned. Job growth is strong. Wages are up. And you've still got this sort of gasoline tax cut. And I think we're going to see the consumer be a bigger factor in the economy, in the housing market, right, in some of the consumer discretionary stocks. And these are really the stocks that I'm looking to lead the market in the first quarter.
Yeah, it's a good point, Todd, that Mark makes. Old faithfuls like Kimberly-Clark, we have Public Storage hitting lifetime highs, stocks you don't really hear about. But here's the question, and this is important. Aggregate S&P 500 earnings could be down nearly 5% fourth quarter to fourth quarter. It's going to be a tough go of it through. We have a really whopper of a December that we haven't seen in a long time in terms of market volatility and how the markets are trading.
EMAC, I think that that's what makes a market. Mark and I are on completely opposite sides of this trade. I think the consumer is weak. I think that the jobs stink. And I think there's a whole underlying market. You're talking about the 5% missed by earnings. What about the 65% of the stocks that are already down over 10% in the S&P 500? We're only being held up by a lot of the tech stocks, or FANG as you call it. But overall, the markets are very, very weak here.
Mark, let's leave it on an optimistic note. You've got 5 seconds, Mark. What do you say to that?
I say that we're actually more oversold than people are giving us credit for. I agree with those numbers, and I think that's the reason we're going to see a rally into year end.
Okay.
By the way, that 5% drop, that's all energy. You take energy out, and earnings are actually up in the fourth quarter.
It doesn't matter what it is.
Okay.
It's still down 5%.
All right, we got to leave it there. Thank you, Mark Chaikin and Todd Horwitz. We want to send it over to